Good morning, everyone, and welcome to the European crossover webinar. And we are still seeing euro hang around near these highs. We can go on and take a quick look at the FX area. Hang on a moment. So we're still pushing up here in euro. Take this to the day. Still up in here in the stratosphere. And you can see right here with cable, looking on the 2-hour chart, still hold up, but it traded this past week in a relatively tight range. And also take a look here with CAD. A bounce off of that 132, but which was good that it defended that area if someone was long, but certainly not any type of a definitive move on the back on beyond that. And the dollar index seems to be going right back. We actually have our bias chart support here, back to that 92.89. You can see here, not that far away. And dollar peso did make it to that projected area, which was the 21.92. Aussie dollar still hanging around here. We'll get to all the pairs in short order. We'll go in and take a look at equities. Still holding up here. Also, you can see here in the S&Ps at 33.72. NASDAQ right here at 12,000. And you can see gold. Gold's still making a little push here. We actually just made a push here almost to 1970. That is actually some resistance on the 30-minute. We almost made it to there, and we've gone and paired back just a little bit from there. But starting out the week a bit firm. And with that, we're just going to move into the news because it's once again still the dog days of summer. Dollar in the doldrums, U.S. politics, Fed minutes eyed. The dollar slipped marginally and commodity currencies inched higher on Monday as investors were relieved by a delay in the review of the U.S.-China trade pact, which left the deal intact. The moves in the Asian session were modest as a weak data and uncertainty ahead of a week that includes the Federal Reserve minutes and the Democrats' nomination conversation kept a lid on sentiment. Against a basket of currencies, the dollar traded under gentle pressure at 92.98. And you can see here we've even moved a little bit lower. And actually came close to challenging that 92.89 that we've had for bias chart support. The risk-sensitive Aussie dollar inched up to a week high of 71.96, poking around the top end of the channel as traded for a week. The oil-sensitive Canadian dollar also edged 1/10 higher. The United States and China postponed a Saturday review of their Phase 1 trade deal. People familiar with the plan told Reuters, citing scheduling conflicts. That's good news in the sense that it's something we can place on the back burner for now, said National Australia Bank senior Forex trader Rodrigo Catril. But there's other uncertainties coming up that need to be resolved, he said, pointing to the U.S. politics as a presidential election looms and the new virus hotspots in Europe that could challenge the perception that the euro is on an uptrend. Markets are also looking to the Federal Reserve's minutes from last month's meeting due to the release on Wednesday for any clues about an anticipated shift in the policy outlook. Speculation is that the Fed will adopt an average inflation target, which would seek to push inflation above 2% for some time to make up for the years it has been run below it. The bond market is key here, said Chris Weston, head of research at Melbourne and brokerage firm Pepperstone. If the Fed can drive down real yields, then the dollar will follow and gold will rally and vice versa. The yield on the benchmark 10-year Treasury debt rose about 15 basis points last week, its sharpest weekly rise in 2 months, which weighed on the yen by attracting investment from Japan. U.S. 10-year yields dipped a tiny bit to 7.012 on Monday, while the yen was a tad firmer at 106.51 per dollar. Data released from Asia on Monday painted a bleak picture with currency investors unmoved by a couple of bright spots. Japan was hit by the biggest economic contraction, on record in the second quarter, and Thailand suffered its worst quarter in 22 years as the coronavirus battered exports and activity. Thailand's contraction was a little better than market expectations, but that failed to lift the boat. The next noteworthy release is the New York Fed's Empire Manufacturing Survey due at 12:30 GMT. It expects to show a slight pullback in conditions, and a surprise either way could challenge the market belief that the economic fortunes of Europe and the U.S. are diverging. Early in the Asian afternoon, the euro was 1/10 higher on the dollar at 18.57, and sterling inched towards 30.96. The other area was a divergence. It's emerging is in the antipodes, where the anticipation of the federal bank, or I should say the Reserve Bank of New Zealand, taking rates negative next year is weighing on the Kiwi. New Zealand delayed a general election by a month on Monday as it grapples with the new outbreak of the coronavirus in Auckland. The Kiwi dipped 1/10 to 65.31 and fell to an almost two-year low of 101.17 per Aussie. The longer the New Zealand is in its second lockdown, the higher risk of more monetary policy easing by the RBNZ, said Commonwealth Central Bank analyst Kim Mundy. And on to the hot moving gold. You can see here on the gold in a 30-minute, we do have a bit of a gravestone doji here. Could see it pull back a little bit. As I mentioned, we've got resistance just right under 1970, but I guess about 1969.5. And we've kind of eased back from that area. You can see we're still pulling back a bit. Gold firms on a weaker dollar as focus turns to the Fed. Gold rose on Monday as the dollar eased, recouping initial declines following a steep drop in the previous week, focused on the release of the U.S. Federal Reserve's minutes this week. Gold fell 4.5% in its biggest decline since March, and investors reassessed positions after bullion retreated from a record peak of 2,072. Gold does not seem ready to resume the sell-off in earnest as traders wait for the FOMC minutes and the fate of the U.S. fiscal stimulus negotiations. Prices may need to reclaim a foothold above 2,000 figure to suggest near-term selling pressure has been neutralized, making gold more attractive for the holders of other currencies. The dollar slipped as investors were relieved by the delay in the review of U.S.-China trade pact, while a rise in U.S. bond yields and profit-taking stifled gold's upward trajectory somewhat. Fundamentals look sound, and the National Australian Bank economist John Sharma. The minutes for the Federal Reserve's last policy meeting are due on Wednesday, with the focus on hints of a possible change in its guidance at its next review in September. The document might suggest the Fed is not in a hurry to expand the monetary support toolkit for now, said Daily FX Spivak. The sense of urgency could be reduced if Democrats and Republicans manage to agree on another round of fiscal support. Gold has risen 28.4% so far this year as an unprecedented global stimulus seized to ease the economic blow from the COVID pandemic, pushed investors to bullion as a hedge against inflation and currency debasement. And with that, we'll take a look at what's on tap for today. See, gold still continuing to pull back. Now we're down to 1962. We had come to about 1969.5, I guess. Looking into today, reserve asset totals here out of the Eurozone. That's going to be at 6 a.m. Eastern. And then New York Fed manufacturing, we just talked about that. Or not, no, we didn't. We said New York Fed, unless this is also pointing towards, I guess it is, the kind of like the Empire State. Well, yeah, I guess so. But anyway, that being said, that's going to be at 8:30 Eastern. And then we do have Canadian securities. 10 a.m. Eastern, we have NHB housing market. So it's going to be right here, the New York Fed manufacturing. And they're expecting 15. That'll be at 8:30 Eastern. As Troy mentioned, if it weakens any further, then the case is going to be made that a divergence between U.S. economic production versus a European, that it's beginning to diverge, and that you might see a bigger move potentially in the euro off of that. With that, we'll move into the analysis. As I said, it's a relatively slow day. I'll go and start off with the euro. And this is going to be on the euro weekly chart. The euro pressed ahead of the buy chart resistance level of 1845 on Friday, pushing buy stops before paring back. Buy chart resistance on Friday will be 1881, and I don't know why this didn't update. This really upsets me. Hang on one moment. Just get the analysis. I don't know why. Okay. Put this. I know it really stings me that it didn't save it. There we go. Euro continues to hold an overall bid in a stagnant August to date. Looking at the weekly chart level, chart set, we see 1762 is key support, and you can see right here the 1762 right there is going to be key support. A weekly close below that will allow a move down to 1589 if we're able to close below 1762. Resistance will be 1927. So we're kind of trapped right here, and you can see this key area here on the weekly chart. But 1762, you can see the significance right in here. Very key for that market to go on hold. And let's see, right there. Actually, it's 1775 on a weekly. If we close it. There, it's actually 1775. Let's go on and edit that. And the 1927, we had that listed from before as key on the daily. But once again, like I said, we're looking at here on the weekly chart. So pulling this over, 1775. Upside 1927. Look, here's the key thing on this. We can dance all around this place. It's not going to make any difference. Oh, okay, resistance could be 1888. It doesn't really make any difference until we get to 1927. This game can go on and dance all around all at once. Same thing with 1775. Now that's on a weekly close, but we can dip down here and we can take a look on the daily chart. We move to the 2-hour chart. what happens here pretty much is meaningless at this point. And on top of that, it's, we're here in the summer. Um, it's meaningless until we get to 1927. And on the downside, we're not that far away from 1775. That's a key weekly level. Do we pare back? You can point to different areas if we pull back. But like I said, if we get a weekly close below 1775, does open the door for us to test down to 1589. And once again, to use that, obviously it's a weekly close, but you can basically use that as a barometer. We're able to go on and get some movement below there. If we are able, and you can see right here, right there, you see that there at 1771 on a 2-hour chart. Same thing right here, just a few pips. If we close below that on the 2-hour chart, it's going to open that door for them to go and move lower. Let's go on and move into the cable. So you can see here with the cable. Yes, last week was a very tight range. We're looking at a weekly chart here. Cable traded in a tight range over the prior week. Weekly resistance will be 3204. You can see that clears the bell right there, with weekly closing support at 3042. Additional support will be at 2979. Like I said, here we are at 3042. We're not that far away. To me, ahead of those Fed Reserve minutes, we can dance around here, but it's all going to be all for naught. So I'm just going to be here. These are going to be the key areas here. It really doesn't mean anything until we get up to 3204. Moving on to the Aussie dollar. The Aussie's been marking time over the past week. Support comes in at 71.22, followed by 70.63. Two consecutive daily closes above the resistance of 72.04, you can see it right there, will allow a challenge of 73.32. So on the upside, we're looking at 72.04, same here. And on the downside, support comes in at 71.22, about 50 pips away. And moving on to the Kiwi. So the Kiwi says saw its lowest close in 3 weeks on Friday. Support on the correction comes in at 64.71, about 50 pips away, low level 50 pips, with resistance at 66.01. So 64.71 down here. And it looks like we're starting that correction. And the upside 66.01. Per the news story, remember they were saying that the longer the lockdown, the better chance that we could see further monetary easing. And the thought is, anyway, as hard it is to believe, that possibly we'll see negative rates next year. Onto the dollar CAD. The dollar CAD managed to defend the key level of 32 on Thursday with a mild rebound close of 32.66 on Friday. Resistance will be 33.34 with support at 32 even. And on to the peso. So the dollar peso has dropped towards its projected target of 21.92. I think someone had asked me, I forgot who it was on Friday. I posted, I said support is 2202 with a target, a projected target of 21.92. And we stopped at 2202, and I think we rallied up to 2206, and then we started to run out of gas, and obviously we slid back down the pole later in the day, closing down towards that 21.92 projection. So support to start the week will be 21.85 with resistance at 2207. And on to the dollar yen. The dollar yen has stalled at 702. The pair managed to defend the bias chart support at 647 on Friday. Although bullish, the pair may need to drop to a new bias chart support, which will be 634, to attract new buyers with resistance at 692. So we've had that 647, which held up on Friday, but we are looking for a dip down here to 634, potentially. And resistance is going to be 692. Onto the cash dollar index. So the dollar index continues to drag its feet. The index is susceptible to a further slide. Immediate support will be 92.89, followed by 92.56, with resistance at 93.47. A new daily close low will open the door for a move to 92.19. So we got 92.89 followed by 92.56. And with resistance at 93.47. Obviously still bearish. On to the cross rates. So the Kiwi yen has been mired in a 100 pip trading range overall for 2 weeks. The pair is working lower with the first support coming in at 69.44. Looks like we're just about there right now. With additional support at 68.86. Resistance will be 70.27. We should move that here. Down. So you can see here, it looks like we're making that move down here for 69.44, which will be support. And resistance will be 70.27. Still bullish overall, though. Going to move into the euro yen. The euro yen saw a strong weekly close following a previous pause. So you can see here, we jumped up in here, pretty good strong weekly close here, and then took a pause. We even had basically a medium-legged doji right here. Looked like we could pause back for some rest, but we turned around and just like last week, we just took off again. But the pair is now, so immediate resistance is now 26.48, which is where they ran out of gas. They went up just above it. You can see actually they've stopped there this morning. But the pair is ready to challenge a major level of 27.10 with a stretch to 27.44. So you can see here, immediate resistance is 26.48. And let's go and find some support in here. Well, a good support is going to be that prior week's high, which is going to be 25.56. And on to the euro odd. So the euro closed at its best weekly level in nearly 3 months. Upside resistance is going to be the major level of 65.81. You can see that right here. With an immediate stretch of 66.26, support will be 64.18. Onto the euro Kiwi. The euro Kiwi is on a tear. The pair is open to challenge a major level of 82.24. You can see that here, with immediate resistance at 80.96. But we've actually just blown right through here. Look at that. Holy smokes, we're still going higher. So we've just gone to, we've taken out the immediate resistance. We're looking for potentially a move to 82.24. Dang, hang. So we've already eclipsed the 80.96. Let's see if there's anything. You see this high right there, which is 81.77. We'll go with that, 81.77. Holy smokes. Well, we had 81 even for last week, which wasn't too bad. So we closed just what 5 pips away from there. And support is just going to be the high right there, which is 80.51. And on to the ASEAN. So the ASEAN closed at its best level since April. The pair is on the cusp of testing weekly level of 77.10, with stops above to take the pair to 77.76. Support will be 75.40. And on to the Guppy. So the Guppy on Friday made it to the bias chart resistance of 40.22 before pairing back. Resistance will remain 40.22 with support at 38.72. And actually, we made that high on Thursday with support at 38.72 as the pair pulls back for new buyers. Well, we had the 38.72, we had the 42.22, which it did hit on Thursday. And we're looking for this thing to pair back. We're just going to go with the close on Thursday's resistance, which is 39.69. And on to the sterling odd. The sterling odd has stalled and is open for a pullback with Friday's gravestone doji right here. Immediate support will be 81.60, followed by 80.83. Resistance will be 83.16. And that'll take care of FX. And we'll just take just a quick overview of the equities again, equity futures. And you can see here, we're still keeping a pretty firm bid here. Here we are in the NASDAQ futures. We were just at 12,000. We're just right there, just a hair away from it. Look at the S&P, still holding fairly firm. Gold, we did go and pull back. Oh, we actually have pulled back pretty close now. When we came on the show, we just pointed out this gravestone doji here, the 30-minute, and we've just been pulling down from 63 down there to 62. Now we've actually come down to, I guess, about 57 now, and we're at 59.5. So we pulled back $10, not bad from that gravestone doji. Even if you got short at the beginning of the show, it was still they've pulled back $5 from that level of that gravestone doji. You know what? Obviously, with these kind of moves we've seen in gold, it's not surprised to see it pull back a little bit here. Those aren't even; those are almost minuscule moves, but still holding up fairly well here. In gold, you can see here after that dip last week, we had looked. I didn't even think it was going to get there that fast. It actually did it in 24 hours, which was up here. What was it? I don't even remember what it was. I think it's like, I think at the time it was 19. Yeah, it was right here around 1958 or something, and we ended up making it all the way down here to 1873. But we had a confluence there. I think it was we had the VWAP off of the lows from I think it was in June. Down here to 73, and then confluence with the 127% extension, and also the 38 was a little bit lower, and we had a level support here at 75. But as I mentioned, pretty firm still here overall with the equity index futures, and I think will probably stay steady until we get to Fed Reserve minutes on Wednesday. With that, we'll see you in the chat room. Thanks for joining us here on the European Crossover webinar.